Today, we're going to be taking a look at long run economic growth, what it means, and what causes it. So, first, what does it mean? Uh, it is essentially real GDP per capita growth. So, real GDP per capita is real GDP divided by population size. So, that is how we track economic growth. Uh, it generally shows you a link between that and standard of living. So, um, a higher real GDP per capita means a better standard of living usually means economic growth. Not always, but usually. So, what are the sources of this? First and foremost, labor productivity. Um, so, uh, if you have a sustained growth in your real GDP per capita, um, because your output is produced by the average worker at a higher rate, that is economic growth. And this is done by having more physical capital, in other words, giving workers more tools to work with, more human capital, giving your workers more education and training, or changes in technology. In other words, better tools. Uh, so this is all dependent on private investment that utilizes real interest rates. So think back to the loanable funds market. Lower real interest rate means more private investment, means more physical capital, human capital, and better technology. Now, of course, there's a few other things, namely discovery of new resources, but that's just discovery of new resources. That's kind of haphazard. Here we're focusing more on how can an economy cause economic growth, as opposed to just sort of happening into it. So if we look at a sample problem like this, and this is fairly common on the AP test, showing you consumer goods and capital goods, you have to think, okay, which one of these will yield the most economic growth? And for that, you just have to think, well, which one of these represents an investment in one of those things, physical capital, human capital, or technology. And the one that does that is capital goods. So the point that yields the most economic growth is point D. And so if we think about this in terms of, a little bit more pop culture, how do you achieve economic growth? It costs you all of the consumer goods, gets you the most of the economic growth. Now, accounting for that growth, we can go back to your production function, which I know we don't touch on too often, but your production function is uh, it shows that your productivity depends on the quantities of your physical capital per worker and your human capital per worker and the state of your technology. And you do have diminishing returns to physical capital. So as your physical output increases, your aggregate output increases by a smaller amount. So as you add more and more physical capital, your workers can use it, but it's going to only increase their productivity by a smaller and smaller amount as they go. So, in other words, diminishing returns as you add more physical capital. You do need a sort of balancing where you have more humans to fill that physical capital, or you need better technology. So, that's really kind of what you're looking at there. Now, if you're looking at the production function and you want to show growth, it's really an upward shift to that production function because as you're looking at it, your real GDP per worker is on the Y, your physical capital per worker is on the X. If they are able to do more, then it shifts upwards because the real GDP per worker increases. Now, the trouble with this is trying to figure out the growth accounting, trying to find the impact of one factor instead of all factors, because you want to figure out what is going to be the most efficient use of your investment. Do you invest in more physical capital or more human capital or technology? What do you need? And it's sometimes difficult to separate those things out. Now, are you wondering how often this shows up in the AP test? Not too often. It is exceedingly rare to see a production function and accounting for growth on the AP test. But if it does show up, it's usually in this type of manner. You see it shift upwards. That means economic growth. So, as I referenced before, other things equal, more natural resources, at least ones that can be used in production, can lead to a higher GDP per capita because that's another one of those things where you can then have more to give to your workers and they can be more productive then. So why do growth rates differ across different countries and different economies? One hypothesis is the convergence hypothesis. And this is essentially the idea that countries that start with a lower real GDP per capita tend to have higher growth rates because they have more slack in their economy, if you will. So they are able to make up ground a lot quicker. And once you hit the higher levels of real GDP per capita, your growth is much slower. So you should see the lower levels of GDP per capita rising fast and the higher levels of GDP per capita rising fairly slow. So that's the convergence hypothesis. Essentially, countries catching up. Uh, Rates of saving and private investment do need to be high, with government policy promoting low inflation and economic stability. So if you have that sort of mix, it gives you a better leg up for economic growth. You need to promote education because this is how you get more human capital. You need to respect property rights, and you need to have political stability as well, because all of this fits into the investment that you need to encourage economic growth. So if we're breaking it down in a very basic way for the AP test, how do you get growth? Increased private investment is one of the biggest things they focus on. So if you have lower real interest rates, that means you have more capital goods. You have a buildup of your capital stock that yields economic growth. If you have targeted fiscal policies, so lower business taxes encourages more investment on capital goods. Once again, increasing your capital stock yields economic growth. A more educated population, as we said, invest in human capital. Finding more natural resources that can grow your economy as well. And better technology that is applicable across industries increases productive capabilities as well. And that's everything in terms of how to get economic growth that you have to know for the AP test.